Hey everyone, and welcome back to the channel. First things first, what exactly is an options contract? Now, let's talk about the first and most common strategy for beginners. Buying calls. If you're right, and the stock shoots up to $120, your option is now in the money. But what if you think a stock is going down? That's where buying puts comes in. Of course, these are the basic buying strategies. The key to success with options is education and starting small. Don't jump into complex strategies right away. Thanks so much for watching. I hope this guide gave you a clear starting point for understanding how to make money with options. Ever wondered how some traders seem to make consistent profits, even when the market is unpredictable? First, let's get the basics straight. What exactly is an option? So, how do you actually make money? But what happens if you're wrong? What if TechCorp's stock price stays at $50? Or even goes down? This is where the risk comes in. Now, buying calls and puts is just the beginning. More advanced traders often sell options to generate income. This is known as writing an option. And that's a quick introduction to how you can potentially earn money with options. Ever wondered how some people seem to be making smart moves in the stock market? A lot of them are using something called options. And today, I'm going to break down exactly what they are and how you can get started, step by step. This isn't a get-rich-quick scheme, but a full guide to understanding a powerful financial tool. So, grab a notebook, and let's dive in. First off, what even is an option? Think of it like a coupon for a stock. It gives you the right, but not the obligation, to buy or sell a stock at a specific price, on or before a certain date. There are two basic types: call options and put options. A call option gives you the right to buy, which is great if you think a stock's price is going up. A put option gives you the right to sell, which you'd use if you believe a stock's price is headed down. Simple enough, right? Buy calls for ups, buy puts for downs. Okay, so how do you actually start? Step 1 is education. And hey, you're already doing that by watching this video, so good job. You need to understand the lingo, like strike price, which is the set price you can buy or sell the stock at. An expiration date, which is when your option contract ends. Another key term is premium. That's the cost of buying the option contract itself. It's the price you pay for that, right? We talked about. Step 2. Get the right tools. You'll need a brokerage account that is approved for options trading. When you sign up with a broker, they'll ask about your experience and financial situation. Be honest. They do this to make sure you're not taking on more risk than you can handle. Most major online brokerages offer options trading, so do a little research and find one with a user-friendly platform and low fees. Step 3 is to develop a strategy. Don't just jump in and start buying random options. Start small. A popular beginner strategy is buying a covered call. This is when you own at least 100 shares of a stock, and you sell a call option against those shares. It allows you to generate income from the stocks you already own. Another approach is buying a long call or a long put, based on your research and belief about a stock's direction. The key is to have a reason for every trade you make. Now for step 4, practice. Seriously. Most trading platforms offer a paper trading or a virtual account. This lets you practice trading with fake money in the real market. It's like a flight simulator for traders. You can test your strategies, get comfortable with the platform, and make mistakes without losing any real cash. I can't stress this enough. Spend a good amount of time paper trading before you put your own money on the line. Finally, step 5. Start small and manage your risk. When you're ready to trade with real money, don't go all in. Only trade with money you can afford to lose. Options can be volatile. A good rule of thumb is to risk only a small percentage of your trading account on any single trade, say 1 to 2%. This way, if a trade goes against you, it's not a catastrophe. You live to trade another day. Remember, the goal is long-term consistency, not one lucky jackpot. So, to recap, educate yourself, get the right brokerage account, develop a solid strategy, practice with paper trading, and then start small while managing your risk. Following these steps won't guarantee you'll make a fortune overnight, but it will give you a solid foundation for trading options responsibly and intelligently. This is a journey of continuous learning. The market is always changing, so you have to keep adapting. Thanks for sticking with me through this guide. I hope it cleared things up and gave you a clear path forward. If you found this helpful, give this video a like and hit that subscribe button for more content. just like this. Got any questions? Drop them in the comments below, and I'll do my best to answer. See you in the next video.